Hi everyone. Morningstar just released their latest Sustainable Funds report, and I'm here to update my last video on this topic. American investors continue to increase their holdings in sustainable mutual funds and ETFs to the tune of $30.7 billion through the first 3 quarters of 2020. We beat last year's record of $20.4 billion by early July, and by the time we celebrate the new year, we may have doubled it. And here's some context. In Q3, investors pulled $118.5 billion out of traditional U.S. equity funds. They put in $3.8 billion into sustainable ones. Our industry points out various factors supporting this growth. Morningstar says, sustainable funds continue to perform well relative to the broader universe of funds under uncertain market and economic conditions, which have underscored the value of considering ESG-related risks. Morgan Stanley, the urgency of the pandemic, climate change, and the movement for racial justice, even the election, have likely spurred more interest among investors to align their investments with their broader concerns. And UBS, sustainability is at the heart of the COVID recovery plan for many governments, which will likely support ongoing investments in sustainable industries. I'd like to make this point. There are more and more studies showing that ESG practices and financial performance are linked, that companies with strong sustainability practices have better credit ratings and a lower cost of capital, that they deliver greater operational performance, and that stock price performance is positively impacted by good sustainability practices. This simply makes sense. You don't find sustainability data in traditional financial statements, yet that data can drive long-term financial performance. It's like taking a look under the hood at what companies are actually doing, along with the risks and benefits of those activities. Are they wreaking havoc on the environment, creating risk? Or are they leading on stewardship in ways that will enable them to successfully transition to a lower carbon world? And how are they treating their most valuable asset, their employees? Are their practices causing high turnover and all of the costs that go with that? Or are they continually building institutional knowledge that supports innovation and growth? We can analyze and sprout data until the world's 988 million cows come home. And that's important, but so is logic and common sense. People, planet, and profit. If the first two aren't stable, it's so much more difficult to generate consistent, sustainable profits.